Welcome into the show. We've got a great guest today in Kevin Bupp, an amazing commercial real estate investor and partner and founder of Sunrise Capital Investments. This was a great episode on the journey of someone who started in single-family real estate investing at the age of 20, now a massive commercial real estate investor owning assets in many different asset classes all around the country, specifically specializing in manufactured mobile home park housing and a very niche asset class in parking structures. I haven't heard too many investors talk about how they find and structure deals when it comes to parking garages and what their overall investment thesis and approach is to this process. But it was just amazing to hear his journey from single family real estate transitioning into commercial real estate, and how that significantly transformed his life, his financial journey, and how he was able to navigate that terrain over the course of his 25 years investing in commercial and single-family real estate assets. He shared a lot of the insights that he learned when being wiped out by the 2008 Great Financial Crisis, and how he got back on his feet, got back into the real estate game. I'm always very intrigued by hearing people's learning lessons when, they experience some failure. He talked about his top 5 most profitable assets. We talked about the differences that he likes to focus on as an investor, from cash flow strategies to equity and net worth growth. We talked about some of the best skills that you can learn when you're first starting out in commercial real estate, transitioning over as a real estate investor from single family, how to diversify risk. And really, we talked about this patience and the mindset that is necessary for building real wealth when it comes to the vehicle of real estate in general. He is an amazing investor with an awesome outlook and really somebody who has so much experience in this space. So whether you are a new investor, whether you're somebody that's looking to get into real estate, single family, commercial, or you're an experienced investor, there are some amazing topics and content shared by Kevin in here that's going to empower you on your wealth building journey no matter what. And we all know at the end of the day, if you're trying to build wealth, real estate's got to be in there somewhere. So I hope you enjoyed today's episode. He shared lots of great notes, as well as ways that you can connect with him at millionairemindcast.com. Check out the show notes. And without further ado, let's dig into today's episode with Kevin Bupp. Kevin, how we doing, brother?
Matt, I'm doing awesome, man. Excited to be here.
Well, I'm excited to always talk about and hear people's journey to kind of unlocking that financial freedom, whatever that looks like for them. It's always so interesting to see how many different paths to unlocking freedom, whatever that definition is for each individual person. And it's always funny how many of those paths include real estate investing.
Yeah, no, it's been a fun path. It's been kind of my only path, Matt, which is kind of interesting. I'm really blessed and grateful in that. I always joke and say real estate found me. So like this financial path of freedom found me way back in my just shy of 20 years old. I was 19 years old. So, and it's the only thing I've done. I fell in love with it. Basically, as soon as I learned just a little bit about it, it got me excited, got me intrigued. It's the first thing that during that stage of my life was the first thing that got me really all jacked up and excited, and something I felt like I wrapped my arms around. I wasn't really academically driven in high school, just got by, was going to college, just getting by, like not really sure exactly what I wanted to do. And when real estate came across my desk as an opportunity, I jumped on it, and I really haven't looked back. I mean, I joke and say that I've never really had a real job. I attended a bar for a couple years, while going to school, and in my first couple of years of trying to, find my path, and buy real estate and rental properties and all that. And but that's about as close as I got to a real job. So
that's great.
It's been a fun journey.
And what was that at 19? Like when you say it came across your desk, right? What was it that put it on your radar that got you? I know for me, when I was younger, right, I was like, anything that can make me wealthy, financially free, big checks, freedom over my schedule, all of that kind of stuff. Real estate checked all those boxes, and obviously the ability to build wealth in the process outside of just collecting a paycheck. What was it that kind of came across your plate that got it on your radar?
Yeah, I mean, going back even before real estate, I was always an entrepreneur. I grew up in a both my parents were they had full-time jobs, blue collar family. We didn't go without. I mean, we weren't rich, we weren't poor. We're kind of right in the middle. But we definitely surely live like, week to week, month to month, paycheck wise. It's like, now looking back, I kind of reflect on like just some pretty poor financial decisions my parents made on a regular basis, which is like cars and trading in cars and rolling negative equity and all this kind of crap. And, experienced them filing Chapter 13 bankruptcy 2 different times, before my 18th birthday, to avoid a foreclosure on their house because they made some bad choices on buying things and they couldn't make a mortgage payment, right? Just stuff like that. And so like I was always, even from a young age, like outside of like maybe Christmas or a birthday, like we didn't, there was no, like we didn't get new things, right? Like, I had a bike, but like if I wanted the newest, latest and greatest, I better figure out a way to go make the money myself to buy it, or whatever it was that I wanted at that age, in period of my life. And so from an early age, this is back when it wasn't considered child abuse when kids were mowing grass and things like that, right? So my dad, literally, we had chores as kids, and I think I was probably 7 or 8 when my chore, my brother's chore, we'd split it up each week and we'd mow the grass, right? Like we would go ride our bike up to the gas station, get a can of gas, and fill up the mower and mow the grass, and ultimately had an elderly neighbor that struggled to mow their grass, and I offered to mow for him. He paid me $10, and a light bulb went off. Like that was like kind of the first point in time where I saw an opportunity to maybe make money out of something I really didn't even hate doing. Like I actually enjoyed going out there and mowing it, and it was always fun to make lines in the grass and all that. So like from an early age, I always tried to figure out a way to make money. And so it went from mowing grass to shoveling snow to at the age of 12, I got a paper route. It was a big one too in my area. Like I was so excited for it. Got this paper route, started making actually really, really good money. At the age of 14, my father was in electronics. He taught me how to basically the basics of installing car stereos and amplifiers and all that into vehicles. And I had an older brother. He had friends that were in high school, and back then it was cool to have loud stereos. And so I leveraged my parents' garage to install, electronics in my brother's friends' cars, and made money doing that. And so I was always entrepreneurial in nature, but I just didn't know exactly what that meant. As I got older, I'm like, what the hell do I do? Tending bar, I was making really good money, having fun. But I knew like that surely wasn't like the long-term vision. I just had no idea what it was. So long story short, I was dating a girl at the age of 19, and her mother had recently gone through a divorce, started dating a local guy. This local guy's name was David. David was a real estate investor. That's it. I met David, who ultimately became my first mentor, through the girl I was dating, and just being around, seeing him and meeting him at her mom's house. She still lived at home at that point in time with her mom. So I would be around David. I'd see him. We'd have dinner sometimes together at their home, and I got to know him. And he was he lived a very different life than I viewed him very differently. Now looking back after reading Rich Dad Poor Dad, like he was the rich dad, and my dad was the poor dad, and don't mean that in the derogatory sense, Dad, if you're listening. But just generally speaking, like how he viewed things, how he viewed investments, how he just even just the swagger. I mean, just how he looked at everything in life was through a different lens than that of what I grew up with. And so that was intriguing to me. And he drove a nice car. He seemed to have a lot of flexibility in his lifestyle. Like he was around the house at like, he'd show up at 2:00 randomly in the afternoon. I'm like, in my mind, I'm like, that's when old people are supposed to be working, right? Like, what's he doing here?
Right.
So come to find out, he's got rental properties that he's got tenants in, and they're paying his mortgage and his expenses, and he's making cash flow from this portfolio that he has. And so that was the first introduction. I mean, he basically, what ultimately occurred is after a couple months of knowing him, he randomly invited me. I didn't really understand what he did. All I knew is he owned real estate, and he made money from it. That was it. I had never read a book on it. All I knew about real estate was realtors, and that they had signs around town, right? And they sold things. But outside of that, I didn't really know much more. He invited me to a conference down in Philadelphia. Looking back, I'm like, what the hell did he invite me for? But ultimately, he probably saw a floundering 19-year-old kid that didn't know was smart, but didn't really have a clear path as to what he wanted to do in life. And so maybe I could, give him a hand up. And he invited me to this conference that was that he had already paid for, on how to. In fact, it was Ron LeGrand. The guy's still around today teaching stuff.
That's wild.
But how to basically it was a conference on wholesaling and fixing and flipping houses. And what came out of that was not. I didn't learn everything I needed to know, but what came out of that was excitement. And I met a lot of other folks during those 3 days that didn't feel any smarter than I was, but that were doing way bigger things than what I was doing. And hadn't been doing it that long. Some I met that a year or two, and they're making, they're cashing checks on wholesale deals for 15 grand, 20 grand, or they're flipping houses making 30, 40, 50 grand. And that was like just mind blowing to me. And I'm like, well, if they can do it, I can do it. So that's where it started. And ultimately, I ended up coming back and I went to work. I knew that I wouldn't be able to do it on my own, and there'd be a better way to just be around David more. And so I kind of made him an offer he couldn't refuse, which was basically, I'll come to work for you for free in between tending bar in the evening. And I had I had like 12 credits. So I wasn't taking a lot of classes. And so I did. He accepted the offer. I went to work for him for over a year, whatever he needed. Literally, I'd return phone calls, I'd drop off leases, I'd pick up supplies from Home Depot, I'd go pick up coffee, whatever the hell he wanted or he needed, just so I could be around him, listen to him, what he said, how he said it, who he said it to, why he said it. And just through osmosis, I learned the business, the basics of the business, and ultimately bought that very first rental property just over a year later at the age of 20. And that was the start of it. So that was a very long-winded answer to the kickoff of this call. So I'll shut up now for any clarifying questions.
I mean, I think
I was age of 20. I'm 45 now, so I've been doing it now full time for 25 years.
Amazing.
And it's been a fun.
Well, I'm excited to hear about the climb and the journey after that, right? Because I think everybody has kind of that fork in the road moment where you are on a path and you could keep staying on that path, but you may, feel like it's just not the right one that feels aligned. Then all of a sudden you get this opportunity to, take a different path. And some people go down it, and take that leap of faith and burn the boats and lean in. Like you did, very similarly. My first 12 months right out of college was working for a guy for free. And I was doing all the project management, all the acquisitions and dispositions. And like you said, just getting in proximity through that process, you really were able to kind of like hack, through that guy's Rolodex, through his resources, his wisdom. But I also think the other thing that, kind of comes up for me is like that confidence piece, right? Is, sometimes you get somebody else to lend the confidence they have in you to yourself that gets you over that hump of, taking that leap of faith. And that led to obviously your first purchase. I heard before we got on the call, some of your latest purchases, which are, probably 100x the size of that one little single family house. Tell me more about what it looked like for you when you got in the game. For new investors, I always find like you just don't know what you don't know, but the fact that you get into it, you are now an owner, you're on the equity side. There's so much of a learning curve there, but it's a beautiful one. And then you start to kind of see things slow down. You connect some dots based on what your goals are. You start to revise maybe what path or place you want to, play in within the real estate industry. Knowing that you've transitioned over to commercial real estate from single family, as many smart and amazing investors do, what was it that kind of got you looking over here to commercial when you were in this vein of single family?
Yeah, well, I mean, it took a number of years. I'm not a big fan of reinventing wheels. I mean, if someone shows me a way that works and it's worked for them quite well, then I typically that's what I did to start off with David. I mean, like he was a buy and hold guy. I did learn very quickly in the beginning that I didn't have enough money to buy and hold, right? So I bought the first property, I renovated it, I leveraged one of his private investors along with some cash I had, bought that first property, got it renovated, got it rented. It made like, roughly $300 a month in positive cash flow. And it was going to take me a very long time to get to the point where I could buy the next property either with savings or be able to like, do a cash out refinance on that property. Right. And so I very quickly morphed the plan, created a hybrid of it, and then basically started wholesaling. Wholesaling 2 or 3 properties, keeping one, wholesaling 2 or 3, keeping one. And I did that for really like the first couple of years until I could establish a track record. I met a number of additional private investors to where I could then, have the wherewithal and the financial means to actually start keeping more of these properties that I was finding, the ones I did want to keep. And so I ran with that same model and built quite a big portfolio in my 20s of single family homes. I ended up moving to Florida 2 years into this stint. I moved to Tampa Bay where I live today. And when I got down here is when I really hit the ground running, when things really started to take off. It was a much bigger market. It was growing. What I felt to be a lot more opportunity, a lot more, population moving here, lots of good dynamics in play. And, but in a matter of about 5 years, I built up a portfolio of about 122 single family homes, rental properties. And as well as a few other miscellaneous commercial properties. I started dabbling around that point in time and in buying. I bought like a strip center. I bought an industrial property. I bought an office building. I was kind of like tinkering around because I heard that commercial was great, but I just didn't know. And so I started dabbling, as well as multifamily. I bought a number of multifamily properties, but really, to answer your question about the pivotal moment, I should have. I identified weaknesses in my single family strategy, even while I was growing. I identified some inefficiencies with operations. And technology days made things a little bit more efficient on managing properties and in multiple different locations. If you got single family, it's just they got virtual lock boxes now. That shit didn't exist back then. I had physical sales and leasing agents and handymen that were driving from property to property. I mean, like there was just a lot of waste that was happening, and I should have probably slowed and made more of a pivot when I identified that, and I did. And ultimately, what happened is leading up to '08, I was down in Florida here, basically ground zero. I ended up losing everything anyway. Kind of got wiped clean. And so when it came time to rebuild, I took about a 3-year hiatus to basically manage damage control with everything. It was chaotic and it took many years to unbury myself, at least enough to like get up to breathe, to actually start looking, hey, what's version 2, what's phase 2. And so, but at phase 2, I'm like, okay, well, I'm not going to do it that way again. Like, I just feel like it took me a long time to buy one by one property. Right. And on top of that, there was inefficiencies with operations. And so I was like, well, hey, I like residential a lot. Multifamily just seems to be the better way to bake the cake. And so that was the plan. However, that plan took a slight shift when I met an individual that introduced me to mobile home parks. I had never considered mobile home parks before. You see them all around us. You're in California, there's a home there. I'm in Florida, there's a ton of them here. I'd never known anybody. I never met anybody that had owned one. And however, I met this guy, Randy, that was a banker, and he ended up buying a couple. And just by happenstance, a friend introduced me to him, and he piqued my interest enough during a lunch meeting. And I left that lunch meeting. This is in 2011. And I was so excited. I was like, well, I'm not buying multifamily. I'm going to go buy one of these parks first and see how this goes. And the rest is history. I bought that first mobile home park back in early 2012. It took me about a year, and up in Atlanta, and literally owned it up until about 2 years ago, and bought the second, bought the third, bought the fourth. And that really is what that was a big pivotal moment for me, from going from what I call commercial. Like I said, I owned a lot of other miscellaneous stuff, but this is the first time where I really made a concentrated focus on, I'm going all in here. Like, this one makes sense for me. I get the dynamics of it. It's kind of an untapped resource, at least at that point in time. It wasn't as commonplace as it is today.
Right.
It wasn't on the radar of private equity groups or institutional capital. And I went all in, and it's proven a good decision, I guess you could say, a decade plus later. So
no doubt,
that was really the big pivotal moment where I made a big switch and just kind of ramp things up, and decided to throw both feet in and just go full charge.
Now, I know we'll talk a little bit more about some of those deals, those strategies, and kind of get some of those gems from you on your journey and experience in those particular asset classes. I always think there's some wisdom and some pearls to be pulled out of some of the failures, and going back and hearing so many different people's journey and experience through the financial crisis of 2008. What were some of the things looking back that you learned in that journey that you carried with you of, I'm going to do more of this or not do that again in this next phase of getting back into real estate, knowing that so many people kind of just shut the door and close that chapter on real estate altogether after that, hit them so hard?
Yeah, again, one of them was just the type of assets I was investing in. I think there was a better way to skin the cat than buying single family homes one at a time. Another big piece of that, I would say, the type of debt I had in place. Normally what I would do is I'd go buy 4 or 5 single family homes with private money, do renovations to them, and then basically go get a commercial note and cross collateralize 4 or 5 of those homes. Like that, that was kind of standard practice.
Yep.
However, those commercial loans were they're all recourse, full recourse loans. Non-recourse, it doesn't really exist. It doesn't really exist in that size of loan, and for that type of loan, it might today, but it just wasn't really practical, or wasn't a thing back then. And so, but didn't really, I had low leverage, generally speaking, low leverage across the board, pretty conservative if you would look at it from a leverage point. But looking back, when it came time when we were having financial struggles, as a borrower, when there's full recourse and every single asset that I own is on the line, including bank accounts and cash and all that, it's not an equal partnership between a borrower and a bank at all. And I had no leverage at all. And in the beginning stages of this meltdown, banks were not, they didn't know how bad it was going to get, and they were not willing to work with borrowers. They weren't flexible. They didn't even have the means or the capacity to work with borrowers.
Right.
And then it just became such a monumental problem. They were forced to figure out how to either they got taken over by the FDIC, which a lot did and went out of business, or they were forced to actually start doing loan modifications and loan workouts and things like that. But in the first 12 to 18 months, they weren't willing to do that. And looking back, it's like, I didn't have any leverage. I mean, like literally, like all my personal assets were on the line, and so like they didn't give a shit. They're like, pay us, or we'll not just take the properties back, but we'll also take, we'll garnish your bank accounts and this, that, and the other. And so, fast forward to today, I would say that 95% of the loans we put in place are non-recourse loans. It's a much more equilibrium that I've found between lender and borrower. It's more of a business partnership. And especially the larger the loans you get, the more in charge the actual borrower is than that of the bank. And so it becomes in the bank's best interest to work with a borrower the larger the deal gets. And so you got these small deals. They didn't give a shit about me. I was just a small blip on their balance sheet, and they don't want to deal with me, and I had no leverage to get them to deal with me. So that was some big lessons I learned as well. And then, I'd say outside of that, while I've always argued that I was a cash flow investor back then, and surely I would make sure that everything that I bought had some type of positive cash flow after it got stabilized. I think I got caught up in the appreciation bubble that ultimately started happening in Florida. And where you could literally, I could buy something and I could hold it for a couple of years, maybe make a little bit of cash flow. So I could still argue I was a cash flow investor, but ultimately sell it, 2-3 years down the road, at a 50-60%, increase from what I had into it. So, looking back, like that doesn't leave a lot of room for error or margin for error, and ultimately absolutely kicked my ass when the Reaper came, right? And when values dropped, and that no longer did I have plan B in place to where I could like exit out of these things. Yeah, it wasn't there. And so for that reason, like today, I mean, we're absolutely, it's got a cash flow today. It's got to be self-sustainable today, and then have quite a bit of upside and room to run, for a number of years down the road. So we just look at assets a little differently than what we did, historically. So that's big lessons.
Yeah, that's great insight. Because I was going to ask. I always love to ask. Because everybody has a different equation that they're solving for, right? And so some people are, more cash flow focused. Some are more, equity and long-term, wealth preservation and growth focused. Some want a hybrid of that. So I'm always curious, to see different people's perspectives around, hey, are you a cash flow guy? Are you an equity and I want to see my net worth, my balance sheet grow guy? Or, and why? Did you kind of land on that? And obviously you shared a little bit.
I like them all those things you mentioned.
Yeah, right. They're all great.
And we say, wait, don't get me wrong. Like we still, like for example, like we'll do one-off deals. We just bought a park a couple months ago. It's been one I've been working for like 8 years trying to get this guy to sell it to me. Phenomenal market in North Carolina, one of the top markets in North Carolina. It's a 200 space community, so fairly large in size. Was only had about 60 units that were occupied in there. 15 years ago, it was 100% occupied. This guy just has done a horrific job of running into the ground, basically. It's such a high demand market that we're bringing brand new homes in there, and they're literally flying off the shelves faster than we can get them in there. And so for that reason, like we ended up picking up for below replacement cost. So like it's not cash flow today based on what we bought it at and based on the capital that we're injecting into it. It is it's negative cash flow, and it will be for the next 3 years until we get all the brand new homes in and then do a recap on it. And so it is negative cash flow. It's not positive cash flow. However, we bought it well below replacement cost. And so I know that so how I look at that is like, let's say I was completely wrong on my plan and that we won't be able to bring in these homes and absorb them as fast as what I thought we're going to be able to absorb them. And so we're going to miss the mark on the real business plan. So what's plan B? Plan B is that I know absolutely, hands down, without a doubt, I could sell this thing, fire sale, and get out from underneath it and make money on top of it because I bought it so cheap, right? So like, again, not a cash flow play per se. It will be in 3 years, but it's also, there's a plan B in place that I feel very confident about. Even just the pure land value, scrap any of the improvements that were there. The piece of land, the tract of land it sits on is like 60 acres, prime rolling country, like 10 minutes outside of a downtown area.
Nice.
It would be snapped up by a subdivision developer all day long for more than what I paid for it. So there's a couple exits out of there in a worst case scenario, which I don't think are going to happen, but you never know.
Well, I love that, right? I mean, at the end of the day, you got to, plan for the best or hope for the best, plan for the worst. And, the fact that you've got those safety nets built into your underwriting and your modeling, and you've got a couple different exit, points in the deal and how you're mitigating the risk. Those are all the things that, wise and prudent investors look at. But sometimes you don't know what you don't know. And I want to take you back to, kind of the beginning, now knowing what you do know for people that are transitioning into commercial real estate, or maybe are those single family investors like we were that are like, yeah, man, I'm working too hard for clipping $200 a door, man. That's not really going to get me where I need to go. What were, from your perspective, looking back, some of those, there's so much, like drinking through a fire hose, so much to learn, so much to execute on. If you were to simplify it down to, 2 or 3 core skills or things to focus on when you're trying to get that traction in your, commercial real estate, business and investing momentum, what would you say are some of the most important things that, hey, eliminate these things, eliminate all the noise, put the blinders on and stay right here?
Yeah, I mean, I think there's lots of information out there nowadays that wasn't necessarily readily available, 20, 25 years ago when I got started, right? Like I had to buy, books on tape and that kind of crap, right? And there was only a few. You had to stay up till like 3 a.m. to buy that crap off the TV, right? The infomercials. There just wasn't a lot of, info. And so it was, most of the intel you got was trying to find someone, that was in your field, right? Like that. Hopefully they live local to you, someone that you could surround yourself with that was doing what you wanted to do, and you could be around them and just, again, like I did with David, kind of just learn the business, right? I think that's a little bit easier today to do, just because there is a lot of information out there, lots of people talking about what they're doing. And so I think first and foremost, identify an asset class. Like I always joke and say, like, there's 1,000,001 different ways to make money in real estate. There's a ton of different asset classes. There's different strategies within those asset classes. Not one is better than the next. I mean, surely one will have an argument as to why one's better than the next, but like you can make money in all of them, right? Like, so I'll leave it at that. I won't need to go any deeper. So pick one. Find one for whatever reason you feel is best in alignment of what you want to achieve, your goals you want to achieve, your lifestyle, your personality, whatever it might be, right? Just pick one. And it doesn't mean it can't change down the road, but pick one and then go deep. Don't go wide, go really deep. Learn as much as you can about the asset class. Surround, get to know people that are actually doing what you want to do. Like, you're in the hotel space, get around guys like Matt that are actually buying hotels, that are not just talking about it. They're not just at meetups on a weekly basis or a monthly basis, but they actually own hotels. They're actively buying and doing transactions. Be around them, talk to them, whether you can work for them. I mean, whatever you can do to surround yourself, day in, day out with this one thing, so that you can ultimately, fast track your way to becoming an expert. I mean, I think, and then really, that's all theoretical. Really, you really don't fully comprehend and learn until you actually do. Meaning, like, you actually get involved in a transaction yourself. You put your own skin, into the deal. You put your own blood, sweat, and tears into the deal. You have a couple sleepless nights. You stress out like crazy about a number of things, right? Like just, you sign a loan, and you put your name on a guarantee, on a loan, and know that if you don't do what you say you're going to do and actually follow through, there's consequences. Just a few. Just a few. It could be just a few. So really, I think the information's out there, Matt. I mean, for folks to get started, I think it's just a matter of picking a lane and then taking action. And again, to argue that I don't know where to start, or I don't know where to get the information. I think that's just an excuse. I mean, if you're saying that, like, you got some deeper rooted problems you got to kind of work through, and identify like who you are, what you really want to do. Because if you are ready, it's there. Like,
Yes.
the information is readily available.
Yeah. I'm, curious how you dabbling in office, industrial, multifamily, retail. How'd you land over the course of your career on, I love manufactured housing, mobile homes, and, one that we haven't talked about yet, which is parking garages, which is a really awesome niche that I know we'll dive into a little bit. But how did you kind of narrow your buy box criteria to those asset classes, and why'd you let some of the others go, and why'd you, kind of narrow in on those few?
That's great. Yeah, that's a great question. I mean, I bought I bought a little bit of everything to figure it out. I mean, for me, residential was always easy. There's quite a bit more complexities, even with hotels. I mean, that is much more of an operating business. It's a very different business model than that of having a 12-unit apartment complex. It's just it doesn't mean one's better than the other, right? It's just a different business. Self-storage is very much an operational business, more than it is real estate, and lots more moving parts to it. Assisted living, senior care, all that kind of stuff. It's real estate, but it's much more of an operational business. And and then you look at things like retail centers, like they're great. Like most of the time they're absolute net leases, and there's beauty behind that. However, there's also nuances where a lot of times it takes you longer to, if you've got a vacancy, to find the right tenant to go in there. And then there could be complexities with leases and conflicts in the leases with your other tenants that are in the building. And, there's just other moving parts. And so I'm a simple guy, and I'm like, everyone needs a roof over their head. And so for me, like, I felt as though like that was just like, that just made sense. Like, you can't argue that. Everyone needs a roof over their head. You go into a market that has a demand for housing, and you provide a good quality, clean product at a good price. Someone needs it, and they need it now. They don't need it a year from now, and I don't have to go, sorting through to find the match. And so for me, that's why to answer your question of like what really kind of pulled me away from those other asset classes, and what really made me focus on manufactured housing is just that. And that's why, like I said, when I was going to rebuild on phase 2, it was going to be multifamily, because that just made sense. It just made sense doing it at scale than buying single family homes one by one by one. With all that being said, I literally I've got many personal investments with other guys like yourself, other sponsors that are really good at what they do.
Right.
I don't have any hotels. I've got assisted living. I've got medical office. I've got self-storage. I've got industrial. Probably missing a few there, but anyway, so like I love all those other asset classes. I just try to pick what I'm really good at and what I can get excited about, and also what I feel like I'm a master at. And residential is already there, and like so, mobile home parks literally are just another form of residential housing, right? Like it's a form of multifamily,
right?
And so for me, it was really an easy plug and play fit.
I love that. I mean, you've got your understanding, your comfort level, but also the scale and the path that you felt was more aligned with the lifestyle, the income goals, the wealth building goals, and you mined in that vein. You became an expert in that vein. And like you said, hey, doesn't mean that you're not willing to jockey up on other horses that are an expert at running their race. That's right. But that was your race. You narrowed in on that, and you really focused singularly on that. Now, how the heck did you transition over to the big concrete parking structures?
Yeah.
And why do you like those? And give us a little, insight into how your brain thinks around engineering, deals with the parking structures.
Yeah, that's a great question. So I will say that we were in a single lane in the manufactured housing space for many years before we ever considered anything else. We always, kept true to our purpose of like not chasing shiny objects. Like we make really good money here. We do it really well. Why the hell would we look to, dilute that by any means? And so, but I run a podcast. I've been running it for now 11 years, called Real Estate Investing for Cash Flow. And on that show, I bring on guys like you, right? Other commercial real estate guys that are out there in the trenches, doing deals, doing transactions, in a variety of different asset classes. And I love bringing on guys that are really niche. So I've had a few different periods of time where this is back before car washes were cool. This was like 8 years ago. I did like a whole car wash segment where I brought guys across the country on that were in the car wash space. I did a laundromat segment. I did interviewed the largest owner of bowling alleys across the country, like as a real estate business, like all these niches. But one of those niches happened to be parking. I forget how it came about, but I ended up bringing a guy on the show that he was a parking broker. He was like one of 5 that were specialized in transacting parking assets across the country. But he also owned his own portfolio of surface parking lots and garages and different markets. And it was one of those interviews I went into. Was really intrigued. I'm like, I don't know anything about this, literally, and I couldn't find too much online about it. Right, like no one had written a book on parking lot investments or anything. I'd never heard a podcast, and I didn't know anybody that owned parking. So I'm like, I'm so intrigued. I'm excited. And I interviewed him and asked a lot of questions and got off the interview, and I couldn't stop thinking about it. And so I literally called him up like a week later, and I had more questions, flew him out to Tampa, and a couple months later, had lunch with him. And, I was so intrigued by the business model. And as I dug deeper and learned more, I just realized that I thought there was an opportunity there. But even then, again, like not wanting to dilute focus, it took me talking to him. I would start going to association events. There's like 2 big national parking associations that have big annual meetings, and I attended those. I got to meet other people in the industry. There's a lot of complexities in parking, way more than, it's not just to rent the parking spot. Like it's way more than that of anything that we're in manufactured housing. But with that, it took me a couple of years to get comfortable in diluting any of our focus, right? And bringing a new asset class into the fray. And we ended up we didn't end up buying our first. I think I interviewed that guy in 2017 or 18, somewhere around there. We didn't buy our first parking asset until 2020, October 2020.
Okay.
And I've been buying them ever since. But so it took us quite some time to get there. But really, it's I was intrigued by, where for us, we look at parking as we buy, number one, parking is a diminishing supply. Like literally, pretty much every major city across the country has removed the parking minimum developments from new development, parking requirements from new developments. Meaning that, like historically, if a developer came in and said, "Hey, I want to build a multifamily property, I want to build an office building, I want to build a mixed-use condo, whatever," you had to build X number of parking spaces per 1,000 square feet. There was a formula, and most of the time, it was always excess. You always built more than you had to, but developers had to do it. They were required to do it. Well, cities have realized over the last couple of decades, they've got excess parking. A lot of them do. And so they removed that. And now developers do not build any parking they don't need at all, because they can make more money by building a residential unit or a condo, right? And so, and then a lot of surface lots that have historically been in these, core downtown areas are being developed into things, right? And so that surface parking lot's going away. And so parking has a diminishing supply. And so basically we look at it as, we find an opportunity, a phenomenal market in an irreplaceable location. It's got to make sense as parking today. Excuse me. It's got to make sense as parking today. And we know that inevitably, whether it be 10 years, 15 years, 20 years, that's going to have a higher and better use of something else in the future. But we'll make a lot of money today as parking. It's just like any other asset class. We buy things that are mismanaged, right? Like they're mismanaged. They haven't upgraded technology in 15 years. So they don't have dynamic pricing in place, where they're not adjusting pricing based on supply demand factors in the marketplace of special events and all that. And so we can go in there and pull those levers like we do in other types of real estate, and increase the NOI, increase the value, and literally make a lot of cash flow and on a piece of property that we know inevitably will have a higher and better use. Like today, any parking that we own, we know that parking is the lowest valued use that piece of land will ever see.
Yeah,
it will have a higher and better use at some point in time, and so as long as it makes sense for parking for the next X number of years, whenever the time comes when it doesn't, we can scrap it and do whatever else we want to do at that point.
I love that.
For us, it's a cash flowing covered land play that makes a lot of cash flow.
Yep. Yeah, I was going to say the covered land play is, often overlooked by a lot of people, and it's a phenomenal strategy if, to your point, good locations, the highest and best use of it down the road. Some of my mentors and the wealthiest guys I know, they are land bankers that love to mothball, A+ quality dirt and core plus locations with stuff like that, where they know, hey, as long as it generates some kind of yield and clips whatever coupon our capital needs, for the next X amount of time. And we know that once we get to that point, essentially, we're good, and there's going to be another opportunity here that's going to be even more valuable. It's a brilliant strategy. And it, reminds me of, you said it took you 3 years to get comfortable getting to a place where you were ready to take action on that. It took you 8 years of follow-up to get that last mobile home park And I think for a lot of people coming into the commercial real estate space, it's really important to have that crock pot mindset versus the microwave mentality that, many people have in single family, more of these quick hits with a wholesaler flip, a lot of in and out, more velocity. But it's obviously not as plentiful and juicy, or the recipe isn't as good with what the dish comes out as, hence the crock pot. But it really does require that mindset and that mentality. So talk a little bit about how your investors, your capital partners, how are you structuring these deals around what timelines? What are your capital stacks looking like? How are you setting the precedent of patience to allow the recipe to come together to create that great dish?
Yeah, no, it's a great question, and we've evolved over time. I will say that we do everything in a fund structure. We're currently on our fourth fund. It's a $100 million fund. We're about 18 million shy of wrapping up that fund.
Right.
And so we've always done everything in a fund structure. We'll continue to do it that way. Our current fund at present is a mixture of manufactured housing and parking. So we do blend the two, at least in this fund and our previous fund. And to answer your question about so we have a long-term vision, and we always have, and we've gone full cycle on roughly 20 mobile home parks in the past, call it 7-8 years. And I would say that there's some major regrets, and most of the regret lies around we shouldn't have sold a number of those assets. We should have kept them. They're not making more of them. Every time we sell one, it becomes inherently more difficult to find a replacement of one that we know the ins and outs of, all the skeletons, right? Like something you already own, like you've worked out all the kinks, all the skeletons that are in the closet, right?
Yep.
And again, we're in an asset class where they're not building more. Same with parking, like they're not building more of it, and so we've really morphed. And it'll go around, like our investors will get jazzed when we go full cycle. But the funny thing is, we've found that a lot of our investors over the years, when we've gone doing full return of capital or we sell assets, we get more negative feedback than we do positive feedback. And most of it relates to they're happy to get a check, but number one, now they've got a tax problem that comes as a consequence, right? So the mobile home parks have incredibly high depreciation. They're probably the most tax efficient asset out there. So for every dollar of value in a mobile home park, we're typically able to give our investors, and it's trickling down now because of the scaled back of the bonus depreciation. Right. But like this year, the last park that we just bought of the year, basically for every dollar of value in that park, we end up getting about 68 cents of a paper loss. And so whenever we go to sell something, there's recapture, right? Like number one, you get a gain on the upside, and then there's recapture that you have to pay. And so we found our investors you made us really happy back then, and I'm happy that you made us a profit. However, I got to find another home for this money, and you gave me a major tax consequence I got to deal with. You kicked the can on it, but now it's here, right? And so for that reason, we've really evolved our strategy. Number one, to focus on keeping everything that we want to keep, we're going to keep it, not be forced to sell it. And that could mean 10 years, it could mean 20 years. But for that reason, we've really started evolving who our target base is for investors. I don't want the guy that, we're not the right fit for the guy that's looking to recycle his capital every 3 to 5 years. He's not, we're not looking for a guy that's only IRR driven. That's really the only metric that really matters the most to him. That's not a good fit for us. We're looking for the guy that's pretty much at the wealth preservation stage. They made good money. They're looking to get steady clips. They want to have passive income. It doesn't have to be in the tune of double digits, a double-digit returns on an annual basis. They just want a high quality asset in a high quality location, and they want to know that the money is going to come for quite a number of years, and that I'm not going to call them with a tax consequence or an issue every couple years, and then you'll put them to work to go find something else to put that money back into. So now our investor base really is much more long. It's a better alignment of who we are and what we're doing, and they've got a good estate planning in place. They're looking more to the long term, whether it's them or their next generation that they're going to pass us on to. Yeah. So that's kind of how we've built out our fund structure, who we work with, who brings capital into our deals. And again, just all built around a long-term horizon, 10 plus years.
Well, I love that, and it's inspiring to hear your journey, because it kind of, I think one thing I want to spotlight for any listener that, whether you're starting your first business or you are looking to transition from one business to the next, or one side of the industry to the next, single family to commercial. I know for me personally, and I'm curious to hear your answer, when I got into wholesaling my first house and how fired up I was. If you would have told me that a decade later I'd be, selling a hotel portfolio and I'd be owning, commercial strip centers and I'd be doing all these things, I'd say, man, that's amazing. But like, I can't imagine that. Right. And it's awesome to see how when you get into a space and you start learning the game, how your strategy and your vision and what's possible for you evolves as your skills and your time in the industry evolves as well. I'm curious, did you ever envision being here? And also, what does your vision look like going forward, knowing how big the possibilities are when you continue to take action the way you are?
Yeah, it's a great question. I didn't ever not envision not being here. And I will say, I'm a pretty competitive guy. And I'm typically very driven when I'm around others that I feel aren't any better than I am, that ultimately are doing big things, right? And so I think back to your point of the proximity of power and who you surround yourself with. And so I have found that for me, it's always been, just seeing what other folks are doing. People I admire within an industry, people that are no different than you and I, right? Like they just been maybe doing it longer, right? And or they've been at it longer, or maybe they've surrounded themselves with others that think a little bigger, right?
Right.
And so just, being a social person that I am and surrounding myself with those individuals and people that have always done a little bit more than I have, owned a little bit more than I have. I never envisioned that I wouldn't get there because I'm like, well, shit, if Tom can do it or Fred can do it, I mean, like, he's a great guy, smart guy, but his business is no different than mine.
Yeah.
He's just been at it a little longer. He's done maybe his average deal size just a little bigger. Maybe I need to start doing bigger deals. There's a reason why he's doing it and he's doing so well. So anyway, it just, I never envisioned not being here. I'm very grateful that I am. So I don't want to, lack any gratitude or just say that I'm incredibly blessed and just, I don't know, just, it's a beautiful thing, man. It's been a beautiful run. Sure, there's been a lot of pain along the way. I mean, there's been a lot of strife and pain and challenges and barriers and even now, I mean, I'm not gonna say like, hey, shit, there's always, I mean, we just closed we had the biggest year that we've ever had last year. And we closed two really big deals at the end of the year. But now the real work begins. It's funny, like literally, like we closed them out like the last couple of weeks of the year and everyone's celebrating. It is a big celebration. It's something to celebrate. Like,
absolutely.
Both these things were really hard to get to the finish line and it made for our biggest year ever. But now the real work begins and it's like, that stress, you kind of feel the stress a little bit. It's like, we got to get to work, guys. Like we got a big burden on our shoulders now and we're not stopping though. We're going to keep growing. So we got to work on this over here now that we all celebrated, but it's just getting started as we continue growing down this path. So, but it's fun. I really enjoy me personally, I enjoy the art of the deal. Like that's, in our business, I've got a business partner. He kind of runs the financial side of the house. He runs the IR team, does all the capital raising, runs that entire team as well as the finance team. I run acquisitions, and then we have a director of operations. I do oversee him. However, he oversees the entirety of our property management team. But really, I'm a deal guy. Like I really enjoy the hunt and the art of a deal and creative financing and structuring things. And so, for me, it's like I don't think of it as work. I wake up in the morning. I just really enjoy it. I enjoy the hunt. I enjoy just figuring out complex situations. And I mean, you and I get paid really well by solving complex real estate problems, right? And I look forward to that each and every day. So you asked me, there's a second part of your question. I went off the rails here.
No, I mean, you brought up some great stuff, right? Real estate, there's always fires in it, no matter what, right?
Yeah,
and it reminds me of just a quote of like, choose your hard, right? I mean, being poor is hard as being rich is hard.
Right.
Being divorced is hard and being married is hard. Being a parent is hard and having no kids is hard too. Like there's always going to be a hard, right? And real estate has some great hard things to work on, but there's always fires in real estate. I always joke around. It's like, at least I'm like you. I'm an acquisitions relationship guy, art of the deal. I've got my operations, my execution team. Thank God for them, for what they do. Because real estate deals are like making babies, man. They're so much fun. And then once it's here, you're like, oh shit, all right. There's a lot of work done, right?
I got to keep it alive now.
Yeah, taking what's on that pro forma and actually bringing it to life in the real world. That's a whole different challenge, and that's where the best operators separate themselves from the people who can just raise capital and get a deal done.
That's right.
But we're seeing that with a lot of syndicators, a lot of funds that are struggling with the gap in some of those skill sets. So I love that you brought that up. The second part of that question was just, What's next, brother? I mean, knowing what you guys are capable of, the path, the compound effect, staying on this path, like how big do you want to get? Why? What does that look like?
Yeah, no, it's a great question. I mean, sure, we have growth goals, and we kind of tie them to AUM, but at the end of the day, for us, it's not growth for growth's sake. We've never been that way. If there's not good deals to buy, then we won't buy them. And I had to reflect back on like 2020. So I went through this before. I lost everything one time. I didn't want to do it again, right? And so my business partner's younger than I, incredibly brilliant guy, but he hasn't. He's a little bit. He's about 8 years prior to me. He just has a young family. This is his first run through the real estate, right? Through the real estate cycle. He's been at it now 10 years, but still, like, he doesn't have, I guess, any of the scars that I have. And so we've always had a little bit of push-pull as far as like me being a little bit more bearish and just being conservative. Like, look, man, 2020, 2021, 2022, when rates were at all-time lows, everyone's like, we've been doing this quite some time. All of a sudden, we've got a lot of people in our space. They're scaling to the moon, buying everything. We're literally not, we're buying, and we had a couple good years there, but like, I mean, we were doing nothing compared to our competition. I mean, like, you start questioning yourself, like, what the hell do they know that I don't know? I mean, like, I can't make these things pencil. We actually sold a lot of deals then and did really well on them, but ultimately, that put us in a really good position these last 2 years. So, I'm not going to say that I saw the writing on the wall or that like I'm smarter than anyone else, but ultimately being conservative and just being true to ourselves and being disciplined. That's really what it came to, being disciplined when it was very difficult to be disciplined because the capital was there. We had to turn away capital from investors. Like, sorry, man, I cannot safely deploy this. Take it back, right? Or just we won't take it from you. Like we have a home for it right now. That put us in a really good position the last 2 years. So the last 2 years were just record monumental years for us as far as acquisitions. We never stopped distributions to any of our investors on any of our deals. I mean, literally, we've continued paying steady clips every quarter. And then ultimately, I think that just put us in a really good position to just kick ass the last 2 years. Like our capital partners are there. Our investors believe in us. We haven't stopped distributions. Our track record's still tight. And then a lot of our competition isn't buying. Like they haven't been buying the last 2 years. They haven't been able to, right? And so to your question now, circling back around, like what does the future hold? I mean, like we got growth goals. We're to continue running with this. We've learned a lot as an organization. We've hired some last 2 years, we've also hired incredible talent. We've really taken advantage of like the displacement in the marketplace to bring in some top tier talent that, from groups that have retracted quite a bit, right? They're doing layoffs and they're letting people go, and we're plucking the best talent there and bringing them over and really putting the pieces of the puzzle in place and the foundation so that, if the opportunity exists to continue growing at this clip, we will. Or if it doesn't, we'll maintain status quo and just continue doing what we're doing. And so long as everything that we do makes economic sense and it's in the best interest of us and our investors and all of our partners. So that's it, man. Just at the end of the day, have fun doing it. We want to make money, but have fun while we're doing it, and just build something that's really got legs and is sustainable. Like for me, like that's the most important part, I think, of what we're building, the company we're building, and just something that's sustainable. Our employees enjoy it. They feel like they're really part of the ride, like they're contributing, like they're getting value out of it, not just personally, but professionally as well. And like, it's just, we got this ecosystem that can kind of live and breathe on its own and do great things. So that's what I'm most excited about. It's again, we got the AUM goals, but I could give a shit about those AUM goals. If we hit them, great. If not, as long as we're still doing fun things together and we're making good deals that make economic financial sense, I feel like that's a win.
Yeah, absolutely. Just staying in the game is part of winning the game, right? Is just being able to play it and not losing money and knocking yourself out. And I know a lot of people that are listening may want to check out Sunrise Capital Investments. They may want to follow your podcast. Where's the best place for them to learn more about you, the company, the opportunities you guys got, the education you're putting out? What's the best place for them to connect with you, Kevin?
Just really investwithsunrise.com. You can go over there and learn about Sunrise Capital, about the group, what we do, how we do it. We got a lot of information on that site. And then my personal website, kevinbupp.com, a little bit about me more personally. And then I also host my podcast there as well, which is called Real Estate Investing for Cash Flow. And then, I always like to say, Matt, my last name's unique enough in that if you just go to LinkedIn, I'm pretty active on LinkedIn, Facebook or Instagram, just type in Kevin Bupp. I'm pretty sure I'll probably be the first one that pops up because I don't know if there's any other Kevin Bupps in real estate. I'm sure there's another Kevin Bupp in the world, but I
haven't found any Bupps out there, so you're the first, brother. Well, we'll be sure to link all that up in the show notes, guys, millionofmindcast.com. Be sure to reach out to Kevin, connect with them. And brother, thank you so much for coming on the show today.
Matt, thanks for having me. It's been a lot of fun, my friend.